Hello guys, welcome back to my YouTube channel. In my previous demonstration, or rather demo session, when I was back testing the hedging strategy, I realized that it wasn't as clear. It was too zoomed out. You couldn't see the candles clearly, and I wasn't talking during the backtest, and I wasn't explaining. So in this case, or rather in this session, I wanted to jump in, create a new session, and essentially help you understand what the strategy is about. During the backtest, I'll also be explaining why I moved to this hedging approach, and I'll also show you my results so far for the past 2 months. Of course, they aren't indicative of the results that you could be getting, but I'm finally gaining a bit of confidence in as far as how I continue on with the flow of the market and continue following whatever the market is doing at any particular point in time. For now, I'll just create a session. I think we can start with a balance of 10,000. I'll just take Euro USD. I don't know if you have a preference on any particular currency. I'm just choosing one at random that would allow me to calculate, or rather essentially make the calculations easier on my head. And Euro USD is a good one for that, since the pip value tends to range about $10. I'm not sure of the year to choose. Okay, 2020 is highlighted. Let's just choose 2020 January. Then we can end it on the 25th. Won't use that strategy. I'll just leave it as is. And then I'll call it Euro USD, since this is just a demo, but I'll be continuing with the other backtest afterwards to since I'll have already explained what's happening with the strategy. So I'll save and continue. So as it's loading up, I think I'll explain a potential thing that I hinted at on my previous video, or rather a notion that I hinted at on my previous videos, in as far as why I decided to move to hedging. I noticed something with my trading in as far as how I interact with the markets and how I'm feeling, and while tracking all my emotions using journaling and other approaches that tend to be recommended. I noticed that when I'm trading, or rather when I'm starting on with my trading day without any trades or nothing, you essentially empty on the books and you're just looking at the markets. That's when I had the most significant connection with what is happening, and I wasn't as invested with what I wanted the market to do. I know that for most people, assuming you saw the market doing this, if you don't have any particular trade in the market, your mind won't be thinking about what would be happening next, or what do I want the market to happen next. But assuming you have a sell trade, you'd be wanting the market to shift downwards. Assuming you had a buy trade, you'd be wanting the market to continue moving upwards as it is at the moment and never to come back again. Essentially, you'd be wanting the market to do what you want. And all these expectations you place on the market tend to affect the way you think about profit making, or rather what the market is doing. And at the point where you hit a stop loss, a disconnect is immediately created in your mind. So assuming you saw the market doing this, but you were selling, or rather you saw the market doing this and you decided this is a good place to buy, and you did buy into the market, but then instead of it going in your direction, maybe your stop loss was in and around this area, it takes you out. What used to happen to me, and I think happens to some traders out there, is you start overanalyzing your strategy. You start thinking, why were you wrong? Why didn't the market do what you thought would happen? Of course, I've collected tons of data on my strategy, and I know it's a matter of understanding your probabilities, or understanding that on a large enough sample size, you would get the results that you are seeing in your backtests. But then at the end of the day, when you start considering the amount of work that you put into this, you essentially jump into the market, you expect it to do XYZ, and it doesn't. It instead does ABC. And I know your data shows that more often than not, it does XYZ, and that's what you're expecting it to do. but it doesn't in this specific situation. That doesn't imply that you are wrong, but then how it feels is different from what it implies. And it essentially messes up with your flow, and it prevents you from continuing to notice, let's say that maybe the market went up from this point. You never make this realization, or maybe it stops you from noticing that the market has now shifted and you need to jump in to follow it lower. In these situations, you essentially detract, or rather detach yourself from the market, and at the end of the day, you don't progress. You focus too much on why your strategy didn't work this one time. And yes, it needs an understanding of probabilities, or why one thing happening more often than not doesn't mean it will happen this one time. But at the end of the day, it doesn't click psychologically. And for me at least, I noticed that the use of stop losses tended to affect me negatively in as far as my psychology is concerned. In a bid to find approaches to use, or other solutions for this issue that I was facing, I realized that hedging could help me, because it doesn't attach my expectations in any one direction the market might be moving. It doesn't require me to have any expectations of the market. I just expect the market to do whatever it does on a daily basis, which is start at one point and go to point B. As long as I can ride any move from point A to B, I'll be making money. And something I realized is that while observing all the forums online that talk about hedging, since I did quite a bit of research on this, I noticed most of them were too focused on the notion that when you're hedging, you aren't earning as much. And I noticed that the stop loss approach tends to bring you back to the risk to reward school of thought, whereby you are always focused on, let's say, 1:3, and at some point you get onto 1:20, or you start seeing YouTubers posting 1:40, and this gets you thinking, if they can do it, I can also do it. And you start getting into this school of thought of letting your profits run and all other ideas. And I noticed all these essentially get you into the rabbit hole of thinking you can get more from the market than you usually get on a daily basis. And that sort of thinking also worsens your performance over time. And all these factors, alongside others that I'll be discussing in future videos. Okay, this is just a rant, but I noticed that all of these things essentially affect how you perceive the market. And instead of focusing on what the market has to offer, you start focusing more on your risk to reward, because based on your data, at least, when you have, let's say, a larger risk to reward, you earn more. And that constant search for a dopamine hit made trading worse for me. And as a result, I wanted to also find something that slows me down to some extent, essentially allows me to focus more on specific targets, specific elements of the market, which is, for instance, on a daily basis, I could just focus on letting the market do what it wants. And I know at the back of my head that at the end of the month, I'll have made X or 10 or any amount that the market will have given. I essentially start focusing more on what the market wants to give as opposed to what I want to take out of the market. And this is something you'll start noticing on the backtests, this one and any future backtests that will be coming. At the end of the day, if you just focus on what the market is doing at the moment, what it has to offer, and accept what you're taking out of the market, it tends to give you a lot of fulfillment in as far as your trading goes, and allows you to stay connected with what the market is doing. Instead of trying to chase it, you just let it run. You let it do what it is doing, and you just manage your risk. Essentially, this is where it clicked in my head that the moment I stop focusing on the profits and instead manage the amount that I have, managing my balance, managing my equity, and managing the risks that I'm risking on every particular trade, that's when I started making money. Not even focusing on the 1:20, 1:40 risk to rewards, or even actually, oddly enough, my win rate. I didn't even need to consider all of these factors to make money. Just focusing on managing my risk. You jump in both sides and then you just manage. So this is something you'll be observing, and I hope that it will help you essentially grow. So for now, let's jump in. I'll just take a few trades to kind of explain or rather elaborate on what is happening, and I hope this will actually be enjoyable for you all. So I don't know whether I should jump in on the 4 hour, on the 1 hour, or what. 4 hour looks pretty clean. Let's go to the 1 hour. Good. Based on what I can see on the market, I would say I would be expecting the market to bounce off at this point. If it doesn't, we continue on with the direction that we think the market will be moving. Was it a Monday, Thursday? Why is there a gap? It's odd. Anyway, we have it is getting bullish, so I want to place an order. It will be an immediate buy. Be risking 2 lots. Actually, let me just risk 1 lot, and then we can continue observing what's happening in the market. So market order of 1 lot, and then I can place my stop loss. Let's see, let's just go with 20 pips. So 20 pips. So 20 pips. Would take this, then we will be placing an opposing sell order at that point. So instead of your stop loss, you essentially place an opposing order of equal magnitude. As you can see, 1 lot, 1 lot. The distance between them is just 20 pips. In this case, I could say once the market gets to 40 pips, I'll be using in either direction, that is, regardless of where the market goes from here on out, I'm cool. Essentially, if the market gets to 40 pips, I will be taking part of that profit. Bearing in mind it's 40 pips, I would say 10 pips. So I'll take 10 pips from the market, add it to my balance, and use the 30 pips to close out any particular losing trade that I have. If it goes directly into profit and doesn't trigger my sell stop, I'll essentially have had a 1:2 trade if you had a traditional stop loss here. So let's just observe. Okay, we are triggered in on both sides. As you can see, for those who had initially believed that the market would be going higher and set their hearts onto that to the point that they're willing to risk to place a stop loss here, good for you. That approach allows you to make more money faster. But then this approach, or rather the hedging approach, allows you to make money slower but consistently. And you'll notice from my previous videos, I've been constantly talking about consistency. The more consistent you are with your actions, for instance, in this case, my actions of coming in, observing where I think the market might be going, taking a stand on that direction, and then letting the market move in whichever direction it goes. Like, I have my own opinion of the market, and I don't want to attach it to what the market is doing. I have an opinion that maybe the market would be bullish, but then the market instead decided to be bearish for the day. It doesn't matter at this point. Whatever happens, happens. I'll still survive and I'll still make a bit of money from that consistently. Imagine doing this for 20 years or so. You'll be making money constantly every time you have a trade getting to a certain threshold. In this case, my threshold is 40 pips. But let's see. I'll get this down to 15 minutes. So the market is moving slower. Good. We are in profit of about, let's measure this out, 454 pips. So what do I do in this case? I've made a calculator that allows you to balance out the two and essentially decide what to do in these situations. So I have a losing trade of $656. It's currently losing, and a winning trade of $455, one lot on each direction. So I opened up my calculator. It's currently on Firefox, but I'll also be publishing it on the the Google Chrome web store, but it's currently on Firefox only since I'm still testing out a few calculations and thinking of other things to add to the calculator. Actually, if you have any opinions on what I should be adding on the calculator, feel free to comment below, or to comment below essentially, and I'll be adding all those features to this and many more in the future. So for now, just clear it. I was obviously trading for the day, so it's currently filled up. By default, this is how it looks. So as I had initially mentioned, I want to keep a certain amount on my and add it to my balance. So my balance would be heading up. My balance would be heading higher, or rather would be higher than it was when I started trading this the two trades, and then I'll use some of the profit to close out a losing position. That's why you have a profitable trade section and a losing trade section. So in this case, bearing in mind I had traded one lot for Euro USD, keeping 10 pips of that would amount to $100, and then my profit was 455. So I add 455 there with a volume of one lot, and my loss was $656 of with one lot volume. In this case, the calculator gives us several results. Tells us that I should keep $100, and then I should apply this amount. The keep amount has changed slightly to the one that I added, because after the calculator did the math, it noticed that I can close out 0.54 lots and keep a slightly higher amount than I had specified from the remaining balance. So in this case, I used $354, which is the remaining from this amount, to close out part of the losing position. The losing position in this case was losing $656, which gives us 0.54. The calculator tells us we close all profitable positions, and then for the losing positions, the ones that I've added, actually you can add more losing positions if you have more. For the ones that I've added, it is telling me to close 0.54 lots of the one lot trade, and to be more specific, the negative $656 trade. So 0.5 lots, if you click on that, it copies that value to your clipboard. So go back here, remember we close 100% of the winning position, and then we close this value of the losing position. By now, I know you might be curious of what that results in. So as you can see, my FX replay is essentially calculating or keeping track of what I've done. So in this case, as you can see, I have made $100.76, remember the calculator, and I have an unrealized loss of $301.76. That unrealized loss is coming from this trade, as you can see, 301.76, and we will gradually be dealing with this value across time, essentially making bit by bit while dealing with that loss. So in this case, the market has just moved in a single direction. It has been heading downwards, and I'm expecting it to continue, and it might prove me wrong and decide to head higher. So in this case, I have a decision to make. I can either sell immediately at this level with these lots, that's 0.46, the remaining lots, essentially making sure that both my trades are balanced equally. I can also use the remaining amount. Remember initially I had traded initially I had traded one lot. So in this case, I have about 0.54 lots that are currently just sitting there in my on my margin. I can use it, but I'm not at the moment. So I have a decision to make. I can either sell immediately for 0.46 and balance this trade out. I can also sell immediately for 2 lots and let's say about 20 pips higher from here, I can buy 0.54 and I'll have balanced both buys and sells. What does this do for me? If, for instance, I take this approach, if the market continues heading lower, I have not triggered this buy stop. If this trade wins, it results in X amount of profit that allows me to close this partially, and I will close it at a higher magnitude. Actually, it wasn't 2 lots, it is 1 lot, sorry for that. So I can close it at a higher magnitude than I had initially. Additionally, if I just take the 0.54 buy, for instance, this is also triggered 1 lot, and then the market starts heading higher and it triggers my 0.54 lot buy trade. Remember, this is a lower buy trade than this one. So what does this show? I'm essentially buying lower. So I'm getting a better buy price than I had initially at this point. So if this trade becomes profitable, I'll essentially have bought at a better position, and the profits from this trade can be used to close out the losses from this trade, essentially reducing the overall size of my hedge. Remember, my current hedge size is about this. So if I buy instead and the market goes higher, the hedged size, or rather spread, is reduced to about this value. Lastly, the last thing that I could do is to buy immediately over here at 0.5 lots. Remember, this is a better buy position, and then I add a sell stop if the market continues to head lower. As you can see, if the market continues to head lower, I will have a sell stop of 1 lot. All of those are decisions you could make in this situation. So I'll give you an example. So all of those are actions that you could take in these situations to, number one, mitigate your loss and jump back into the market to continue with the flow. In this case, we have a gap of about, or rather a spread of about 658 pips, and I can take this chance to observe the market to see what could potentially happen. For now, I can see that on the 4-hour time frame, the market is overextended, it's heading downwards, or rather barreling downwards based on what I can see, and I would argue that it could start reversing from this point, since there's potentially there's essentially a point here where the market might find support, but it could also head lower. So regardless of my beliefs of the market or what the market might do, I can take any of the actions that I've just explained. In this case, I think I'll be buying. So I can come in, place a market buy order of 0.54. Remember, you don't actually need to use up the whole of your capacity, you can just use part of it. Can buy, and then 20 pips from there, I'll be selling. So a sell stop of 1 lot. So if you do the math, I'm balanced for the buys and the sell. So essentially I have one lot in total for the buys and one lot for the sells. So I'll be moving my profit point indicator to this trade so that I can know when I'm getting to 40 pips. And once this trade is triggered, I'll be giving it its own indicator. So for now, let's move forward. The market is headed down and it has triggered me. So now I give it its own profit indicator. I know for some of you, you might be worried. Now you have more trades that are hedged, and I must admit, at some point this gets a bit complicated. But with time, once you get the hang of it, and with tools such as this, it allows you to manage your trade and easily manage any hedge position that you have. So for now, let's just proceed. As you can see, the market did reverse, not at the point where I expected, but it did reverse. And it's finding a bit of resistance here. Nice. And we are in profit to some extent. This is about 443.3 pips. So we take the profits from this trade and close out this trade, or rather reduce this trade or the losses that we have in this trade. Bearing in mind it's 0.54, so we can take 0.54 with our pip value of 10, and we are taking 10 pips. This gives us about $54. So we are keeping $54. Remember, I'm only keeping 10 pips of any winning trade if the trade was hedged. If the trade wasn't hedged, I keep a total of 40 pips. Of course, over time, whichever strategy you're trading, you will get certain winning trades, and in those cases you just take the whole of the profit if you're not hedged. If you're hedged, you need to use part of the winning position to close out the losing position. In this case, I'm using 25%, which is like of 40 pips, 10%. Okay, from 40 pips, 10 pips is about 25%. So I'm using 75% to close out the losing position, to essentially hedge myself out of positions faster. I'm essentially closing those losing trades faster than I could have if, let's say, I was keeping 20 pips. So it allows me to bring my trades to where the market is, as opposed to keeping them this far. So that's essentially the approach I use. So for now, let's just input all these values to my calculator. I'm moving things slightly below so that I can see the two trades that I'll be working with for now. So we are keeping $54 from our winning trade. It has a total of 233.28, and it was a trade with 0.54 lots. And then for our losing position, $632 in loss with a volume of one lot. The calculator tells us to close 0.28 lots of the one lot position. So I just click on that to copy it. Go back here. Of course, we are closing 100% of our winning position, and then this value of our losing position. For those keeping track, our loss is slightly higher than we had when we initially trimmed down our position. It's slightly higher. So essentially our equity is slightly lower than we had initially when we trimmed down the initial position, the initial buy position, this one. And this shouldn't worry you. At the end of the day, you keep on trimming the market, and the equity might get to a point where the equity, while initially it would be reducing, it gets to a point where it starts increasing, and once you've fully closed out all of your trades, you get to a balanced position. This is why you shouldn't use very large lot sizes like 50 lots or 10 lots, but depending on your account balance or the floating loss that you're willing to stomach. Remember, in this case, let's say I have a floating loss of $558. This is a loss I would be willing to stomach even in my normal trading. But if it's not, please just reduce your lot size. In this case, if that is too much and you want to you can stomach, let's say, a loss of $55.8, you can reduce this one lot to by 10 times, so 0.1. So depending on your risk appetite, manage your risk accordingly. Decide on the lot size you want to be trading. So in this case, our options are the same as they were before. I can remember I'm off balance. So for the buy trades, I have 0.46 lots. And for the sell trades, I have 0.72 lots. I need them to be balanced. So what can I do? I can either buy immediately this lot size. Let me do some quick math. 0.26. I can immediately buy 0.26 to balance these two trades, or I can sell immediately. 0.28. If you add this, you will quickly notice that it adds up to one lot, and immediately buy or rather from a certain distance, by 0.54. I had initially shown you the approach where I essentially bought immediately or balanced immediately. So for this situation, despite what I think the market might be doing, because I think it might be rejecting from this level, but regardless of what I think the market might be doing, I'll still want to show you that approach. So for now, I will place a buy stop order of 0.26 to balance out the buy side of things. So I will take my 20 pips and I will place a buy stop order at the top of 0.26 there. So remember, if the market starts heading downwards, I trail this order downwards to make sure that I'm getting a better buy stop. If it heads higher and triggers me in, it's okay. I can continue following what the market is doing. Of course, in my normal trading, I have coded up a tool that allows me to trail these orders automatically. But for now, since we're in a backtest, I'll be showing this to you manually. I hope it won't get too boring, but let's see what the market does. So it heads higher, so we're not moving. Heads lower, and if you can see, there's a slight wick down here. So my program will have by now noticed that we have a lower price, the lower entry point. So we trail it 20 pips from this point where the market was lowest at that point. And then we continue. So the market has moved lower. We trail. As you can see, over time we are getting a better buy position. Market is moving downwards. So if we had initially sold immediately, by now we could have been in profit and waiting for the buy trade to be triggered. So as you can see, depending on the decision you make, the market might do something else. And whatever it does, the good thing with this strategy is that you just continue moving with how it is moving. You continue with the flow. So it moved slightly lower, ever so slightly. You don't need to be precise during backtest. I'm just doing this since I already have a program that trails down the orders. Not triggered yet. So you just want to keep the market within a 20 pip buffer. Moving lower, as you can see, by now if you could have added a sell trade, could have been in profit, and you could have been waiting to trim down this position. But the good thing with this strategy is that there are no wrong steps. You can continue on, as long as you're balanced, you can continue on managing your trades depending on where the market is going. Because remember, at the end of the day, while the market might seem to be heading low and it's bad for us since we are not in a trade at the moment, we are in this trade, which keeps on reducing the overall profit the overall loss that we have. And if the market reverses at this point, we will have gotten a better buy position, and the hedge, or rather the spread between this order and this one, will have significantly reduced from where it was initially, essentially allowing us to trim, essentially improving our trimming odds in the long run. So as you can see, we keep on getting a better buy entry position. We are in. Once you're in, I take my profit indicator, place it there, and we wait. So now, since we are in one trade, we just wait to see what the market will do. So as you can see, we just got, like, at this specific pip, we could have trimmed the initial trade. We had enough profits to trim, but since we are not robots, we can't essentially be trimming to that precise level. But I have my tool that essentially trails down my orders also trims down my orders at specific pips. So when it gets to that pip, it trims the opposite order to make sure that I'm hedged accurately. Once I've fully tested it out, since I'm still playing around with it, playing around with what it has to offer and such, once I'm done with that, I'll publish it, and you can also check it out and test it out for yourselves. Nice. We actually closed it out at about a pip lower, which is nice. So 0.72 for this one, and it has 292.32 for 0.72 for Euro USD. That will amount, for 10 pips, it amounts to about $72. So that's a profit we're keeping. Our losing trade, the one that we will be trimming, it's the farthest one, which has $580.52 in loss, and it has 0.46 lots traded. Go to a calculator. Let me actually drag this down so that you can keep track of the numbers and you can see it. So I'll just clear everything. We're keeping $72, if you remember, $292 in profit, actually 292.32, and we have 0.72. And then for the loss, we have 580.52, and our volume for that trade is 0.46. It's telling us to close 0.17 lots. Copy that, go to the losing position, close it out partially, and then I close 100% of this. So for those keeping track, we still have a floating loss, or rather our equity will still be below our balance, but we are making progress. That's where this comes in. Essentially, you keep making progress throughout, keep making money. As you can see, we've made so far $234.86. Are we still up in a floating loss? Definitely. But this is where the management side of things comes in. You continue adding trades, you continue moving with the flow, and with time you get to a point where you're fully balanced on both sides, or rather you have fully exited on both sides. You have no pending orders, you have no trades that are in place, and you're just free and you've made your money. So for now, what I think we can do is I'll jump back in and we could do a few more examples to kind of see whether we could get to net zero, or essentially close out all our losing trades If not, we can continue in the next session when I'll be continuing on with this backtest. I won't be deleting it. I'll continue on jumping in on this exact backtest and yeah, dealing with everything that we have at the moment. So at this point, what would I say is likely to happen? On the buy side, we have 0.55 lots on the buy side, and we have nothing on the sell side of things. What do I think might happen? Let's look at the markets heading downwards, forming these the market is heading downwards, and I'm not sure whether it would be reversing or continuing on lower. So in this case, I can just decide based on how I feel about the markets. Remember, there's no wrong decision. In this case, I think I will be buying or going back to capacity. So remember, we have 0.55, so we should be adding 0.45, a buy trade here. Remember, by this point, you might have noticed we are piling on orders. Let me actually see the distance between here. Yeah, we won't even get to the 40 pip mark. So I will be buying immediately. Market order of 0.45. And then I'll place a sell stop at the bottom, so that if the market does get to that point, will be hedged. If not, if it decides to instead reverse, I'll use the profits from this trade to close out the buy that's farther away. So let's see whether we'll be lucky or not. Place my profit indicator there, and we observe what the market will do. So in profit, good. Actually missed it, and we're back, which is nice. So we have $182 in profit. We get to keep $45 of that. So let me clear this out. We didn't trigger a sell stop, so we get to keep 182, 0.45. And then for a losing trade, we have 248.53, 248.53, and it's 0.29 volume in lots. So we get to close 0.16 lots, and we continue on moving with the market. So some of you might think, actually this is something I was curious about while testing out this strategy. Funny story. So I was curious, why wouldn't I just let it run and see how far it gets? Because if it gets to about this point, this trade will essentially be close to break even, and this will have a loss that's so minimal that the profits from this trade can just cover it. This is up to you to decide. However, I noticed in my case that if I follow my rules and just balance at 40 pips, I'm protected whenever the market instead decides to head lower. So I will have essentially reduced this position so it heads lower with me having less to worry about, instead of waiting or hoping or getting attached, which is something I mentioned that most traders tend to do. You get attached to what the market is doing and want it to continue doing that. So in this case, I'll just balance out at that point and exit the market based on what my rule says. So I need to close out 0.16, and I take 100% of this. For those track, once again, we have $133.9 in loss and $111.41 in loss. this is the first time our losses has reduced below what we had initially, if you can remember. So remember we had about was it $600 or $500 in loss. Now we have less than that. I told you the equity will continue reducing until such a point where you're getting free trades or other trades that are not hedged, like this one that we just had, essentially allowing you to close out a bigger chunk without having to deal with the opposite direction. Additionally, if let's say I got a sell trade here that got me a better entry than the buy trade, essentially getting a sell trade here and the buy order was not triggered, it also allows me to close out a bigger chunk of this trade. So that's essentially what I was referring to. So once again, we are back to the decision point where we need to decide what to do next, and this is often based with what you think based on what you think the market might do next. In this case, I would say the market seems like it's heading lower, and it has already started rejecting at this level. I'm not sure whether it can continue higher to about this level or anywhere higher to do whatever it is doing, but in my opinion, I think it's likely heading lower, and then it might head higher after that, but I'm not sure. So in that case, I take a position which will allow me to stay protected regardless of where the market might go. So in this case, I think I will be going in immediately with a sell, a market order with my full capacity. I know it might seem dumb, but it's just what I'm feeling. And then once I've done that, I balance out the higher side of things with a buy trade at about 40 pips from here, 20 pips from here. So on the buy side, we have 0.39 in total. So I need to add a buy stop of 0.61 to balance things out. So in this case, I take this price, which is the higher price, and then I put a buy stop of 0.61, which implies if the market heads higher, we are fully balanced. If the market heads lower without triggering this trade and gets to this point, I think we will likely be able to cross this trade and maybe part of this one. I'm not sure. Let's see what will happen. So the market seems like it has bounced off and it is heading higher, so we will likely trigger this buy stop and we'll be hedged again. We move this out of the way so that you can see what is happening. Okay, seems I was wrong. Or rather, I was wrong with what I noticed, but my initial thoughts of the market seems to be working so far, and we get triggered. As you can see, you never know what the market will do. You never know what the market will do. We need to go faster. Okay, I'm going at about 4 hours. Okay, then I go back to my 1 hour, rather 15. Let's do 15, and then we play. Almost there. Good, we are there. 414. Actually, with 414, let's say 241 on, let's say, yeah, I was right. We could have been able to close out both trades. Actually, right now we can close out the whole of this trade, the whole of this trade, and maybe part of this. I'm not sure. Let's see. For one lot, we're keeping $100. Nope, actually we won't be able to do that. If we keep $100, let's take out our calculator to be sure. This is why you don't try to do the calculations mentally when you're looking at it. So 414, and then our volume in lots is we have one lot, and then we start adding up all the losses. So 165.23 with 0.13, and then we add a new one. We have 241.54 with 0.26. Then we check Are we closing out? No, we are not closing out everything, so I can either continue to add the last one. I can also add it, though it won't make any difference because it has 374 and it has 0.61. So in this case, as you can see, it's still telling me to only close the 0.13 and the 0.26 trades, like just a bit of it. So 0.13, I'm closing it 100%. As you can see, we've now brought our spread closer to where the market is. And then for the 0.26 trade, I'm closing out 0.16. That's actually quite a good chunk of it. Nice. And then for this one, we close 100%. Let's look at the math. As you can see, now we are back to about $400 in loss due to the middle trade, the 0.61 trade. It is actually accounting for a bigger chunk of that. But if this trade had not been triggered, we could have been at negative $92, which is nice. So once again, we are at decision time, whether or not we sell immediately or buy immediately, or yeah, depending on what you feel like doing. So in this case, let me see where we are at generally. Actually almost close to these levels. The market is back here again. The previous time it was here, it ended up bouncing, but it bounced and continued lower. I'm actually not sure on what to do exactly right now, and when I'm not sure, the thing I tend to do is to just balance equally. When I am not sure, I balance equally. So at this point, I will balance at 0.71. Sell stop 0.71. I just hedge the market where it is. So if it starts heading higher, I trail using this order and get a better sell trade, essentially. Continue. So at this point, it headed slightly higher. It was moving too fast. Okay, again, remember, we just want to get a better sell entry point. Once again, we might get a better sell entry point. We are in. Once you're in, we go into management mode and wait for the market. Just wanted to get my profit indicator, profit point indicator, and we continue managing, as you can see. So let's continue. The market triggered me in, and it seems like it wants to go higher, but we are not sure. Making huge wicks, moving with momentum downwards, but then we are still not sure, and we were in profit at some point. I moved too fast. Let's see. As you can see, this actually can happen, and it has happened to me severally, hence why I made the bot to trim down my positions whenever I'm not there, but this tends to happen. But let's wait and see. Good, we are back. So since this happens in real life, like remember the first trade that we had, the market just moved. So this approach allows you to, whenever you miss out, you can still wait, because remember, you're in the flow, you're moving with how the market is moving. Of course, there are swap fees and other fees that you need to watch out for, and that's where your risk management comes in. You only trade certain lot sizes based on your balance or risk that you can stomach. But at the end of the day, the ultimate goal is essentially making sure that you keep the risk to a minimum and you move with the flow. You keep your mind in the market, or in whatever the market is doing at the moment. If it's heading higher, you move higher. If it's heading lower, you move lower. Keep at it. So trimming time. Let me remove everything to keep my slate clean. So we are keeping $71 of our 0.71. We have a profit of 332.99 and our volume is 0.71. Remember, we are keeping 10 pips, which for euro US dollar, which is why I chose euro initially. It tends to be around $10, so it keeps the math different, or rather easy. Keeps the math easy for me. So our loss, we have 148.8. It's 0.1. So are we closing 100%? Yes. So we add another trade, the next one, which is 715.53, and our loss is 0.61. We close 100%, 0.1 lots off the 0.1 lot trade. We close 0.09 of our 0.61 trade. So this one 100%, this one slightly below 15%, and for you 100%. Equity went lower. Remember, keep that number in mind. So for now, I am still not sure what the market will be doing. Remember, you don't need to be sure of what the market will do. As you can see, the market is heading downwards on the 4-hour. It's heading lower. I'm not sure whether it would be bouncing or whether it would be heading higher. So in this case, I'll just hedge equally and wait. So for hedging equally, just place my trade slightly lower. Let's see, we do 0.52 and it will be a sell. So if the market heads lower, triggers me in, and I'm not anywhere close to my charts, it's okay. The market will do that at times. And this is where I fell in love with this approach. You don't need to constantly keep your chart open. You don't need to try and carry your laptop in your car every time. All you need is a balance within the hedge. When you get to your charts, even if it's 2 days later, as long as you kept your risk lower, you don't even need to worry about the swap fees. As long as you manage your risk initially, you calculated your lot size accurately, and then you're hedged, and then you have a hedged position and you know your current limits. Maybe by the time the market is getting to this point, I'll have like a $650, $700 loss. That's okay, at least to me, which is why you should trade with limits set in place that allow you to stomach that loss. Essentially, this is different from the stop loss approach because at the end of the day, you need to start looking for another position. But in this case, the positions that I have in the market will continue making money for me, which is better in my opinion. So the market moved slightly. I didn't even notice it. Okay. We are in. Damn, the market is in a range. So I need to get a natural stopping point for where we can continue in the next session and continue with this backtest and see where the market gets us. But for now, let's just continue, I think. On the next trim, I think I'll be stopping for the time being and we can continue in the next session since it's getting late on my end. As you can see, our loss is limited to about 650, 670 there. Nice, the market has made a very significant move higher. So in this case, what I would do, and I think maybe it was news related, I'm not sure, I would wait for another signal, which is nice. This is actually a good example on what to do when you have such a huge gap and you want to trade within. So what I would do is to find a good point of entering the market. As you can see, it has just rejected at this point. So I would be buying since the market seems like it is heading higher. Remember, since I only balanced to 0.52, I have some capacity available. So in this case, I have about 0.48. So I can buy immediately, can place an order, can buy me. I think the market will head higher. I might be wrong. Doesn't matter in this case. I buy immediately, and then at this point, place a sell stop of equal magnitude, 0.48. So if the market heads lower, I'm hedged. If it heads higher, I can close out this position, which is nice in my opinion. Oh, I forgot my profit indicator. Sorry, so let me bring it in view so that I can keep track of when we get to a point where I need to trim. And then for this one, I'll also move it in view and make it slightly larger so that I stop missing it. Good. So let us move. Okay, just playing. We've picked up the opposite hedge. Doesn't make a difference, just allows us to trade both directions. In this case, I could just place my order there, my profit indicator there, which shows me that this trade has already hit my required profit. So I'm keeping $48 and closing out this loss. Remember, it's the loss that's the farthest. Let me shrink these things a bit so that you can see all the orders in place. So I can clear, and then we're keeping $48. We have 191.52, 0.48, and then for the loss we have 816.92 on 0.52. That's a huge loss. Imagine getting this stop loss. I'd be devastated in my opinion. 0.09 lots, essentially essentially closing out 0.09, which is nice. So take that trade, close out 0.09, save it, and then we close 100% of this one. And we are now sure we are not hedged, we are not balanced. If you might have noticed, 0.43, 0.48, 0.52, we are not balanced on the sell side of things, at the very least, if you're doing the math. So 0.43 plus 0.48 gives us 0.91, and we are off balanced by 0.39. So in my opinion, I am not sure where we will balance at. Since it's a sell trade, I'm not sure where the market will be going. So since you're balancing for 0.39, I will be placing, this is another approach you can use. Basically, this strategy is very accommodating with what you can do. So I'm placing a sell limit at this point. If the market comes higher and triggers me in, I'm good. Essentially, I'm trailing what the market might do depending on what's happening right now, so that I can get a better sell price. If it continues heading lower and gets to the profit of this trade, I essentially just close it out. and clear this order, but I'm trailing it up to around this point. So if it gets to this point, I just leave it in place, since I want a 20 pip buffer between my buys and my sells. So I'm just trying to maintain that. So let's watch what will happen. So we've moved slightly higher, so I'm just trailing that to make sure that I'm not triggered any sooner than I want. You got to this point. There's no point in getting higher than that. Let's see, because we are essentially equal. Nice. So let me first get this out of the way. I'm canceling that immediately, and then we take $52 from this trade. Let me shrink this down. Remember, different approaches for managing your orders depending on how you're feeling at any particular point in time. So 0.52, and then we have a 758.52 loss, and it has a volume of 0.43. We are closing out again 0.09. That's about 20% close, and then we close 100% of this. Remember, just dancing with the numbers. Dancing with the numbers. So in this case, what might be happening? The market has just broken down from these levels that we were seeing here, and I'm not sure what will be happening next. So we currently have 0.82 for the buys, and I'm thinking of just balancing at that level and not thinking too much about it, then closing out this this back test, and then we can continue next time at this exact point. But let's see. So we need a sell stop, and we said it was 0.82. Then we observe what the market will do next. So we got a better price during this 1 hour candle. I know this is an inefficient method of moving, which is why you need all the tools you can get to figure out how you can improve your trading. If there's a tool out there that you can use, please use it. If it can get you to a profitable state, please use it. Okay, seems I'm moving too fast. Let me go to the 1 hour. No, actually 15. Then just play. I notice that I'm missing out on the profits every time, so let's just go a bit slower. Good, we are exactly at 40 pips. Okay, almost exactly at 40 pips, at 434, I think. So this is nice. So let's trim 0.82. we are keeping $82 of that. So 82, and we have 331.28, 0.82, 778.6, and then 0.34, 0.1. Actually, that's a good number. So 0.1, slightly more than what we were trimming before. Which is nice. We're making money, making progress bit by bit. So we are currently hedged. We are not hedged. We are at 0.72 for the buys, nothing on the sell side. So 0.72. I'll just be balancing at that point. So I'll stop. Once this one is triggered, I'll just stop the stream since it's getting late for me, but then we will be continuing exactly where I stopped. That's the magic of FX Replay, which is why I'd actually recommend the platform, and I'll actually be leaving a link down below to the platform, and you'll be getting, I think, a 15% discount on your first purchase on the platform. So I definitely recommend it. It's what I use. But guys, actually, I've been trying to find a platform that calculates swap fees for you, and I haven't had any luck yet. So it's something, if you actually know of a platform where you can backtest and keep track of the swap fees, that will be very much appreciated. Otherwise, I think I might have to like build it, have it built in on this thing or something. I'll think about it. Actually, it might be quite interesting to add it as a feature to this, whereby it also keeps track of your swap fees. But I guess we shall see. Let's continue with the backtest for now. Let's go to the 1 hour. Damn, market is just moving down. I think it might trigger me in, yep, about the, so this is where I think I will be stopping out for the time being. We have a few losses, made a bit of money, and we will be continuing in the next session so that we avoid having like a video which is almost 2 hours long or something. So for now, I'll stop it at that. Let's check out the statistics. This is the previous video's backtest, but this is the one for today. We can just actually check it out and see what we have. So let's see. We started on January the 1st. We are now on February the 8th. Nice. Our equity, of course, is lower. Remember, we haven't trimmed a few trades and we have a few running losses. So yeah, we made about 1% in January, and we are up like 6% on the account balance side of things. I don't really monitor the win rate or the risk to reward, just monitor these numbers. Basically, at the end of the day, what I think about is, have I made money? Have I made it consistently? Am I on a daily basis seeing progress on my accounts? Which is essentially what I'd also recommend you trying to do on your end. It's something I don't, okay, basically all the other metrics, I don't tend to focus too much on them, because at the end of the day, I'm more focused on whether I'm consistently making money or not. So we'll continue on with this backtest. It started in 2020. So the year 2020 to 2024, we have about 4 years of data there. So I'll be backtesting those for some time. So in 19 days, this is the average duration. Let's see, essentially taking a month plus, risking a very reasonable amount, 1 lot total per trade. It's something I'd recommend you, all of you, to try. Backtest this and continue to consistently apply what you believe in trading. Continue to consistently analyze the markets, continue to consistently apply your trading approach, trading strategy. In my case, this is just an approach I jumped to since I noticed the disconnect that stop losses tend to make. If you might have noticed that during the whole process, I was not disconnected from the market. I was essentially trying to think of what the market is doing. I wasn't fully focused on what went wrong on the loss that I just closed, or what went right on the profit that I just made, it is hard to decipher what the market might do next. But this approach allows me to disconnect myself with what I think the market might do or what the market will actually do and just move with the flow. As a testament to what I've been doing, essentially, that this is actually how I trade on a daily basis. I opened up an account I have a separate account. It's slightly smaller, and I was just testing it out. And so far, this is about, I started trading this account last month, that was September. And now it's been about a month, which is a testament on what's happening. Of course, full disclosure, it has a bit more leverage than usual. It's an IC Markets account, but this is actually a live account. Yeah, it's a real live account. And I'm actually trading this strategy. I'm using the live market to essentially observe how it's taking me. And this shouldn't essentially encourage you to try it out live, but it should encourage you to try and test it out. Backtest it, use a demo account, try and see the changes it will bring in you in as far as observing the market and moving with the flow is concerned. I keep trading the strategy. It says 38% up, but remember, this is a factor of the leverage that I'm using. I'm not actually using a lot of a high lot size. It's risking about 0.1 lots. But I recently, due to the profits that I made, I recently moved to 0.2 lots, my full capacity, and I keep on trading using that lot size. So at the moment, this is where the account is at. I trade it on a daily basis. I'll keep updating you on how this experiment goes. But as you can see, these are my current open trades. I have losing trades and one that is winning. And I expect to close out part of the winning trades and use those profits to essentially rebalance what's happening on the market and balance out the losing trades. I use part of the profits, add it to my balance, which is why you can see my balance is heading up. And based on the creator of this approach of hedging, which is the Forex Hedge channel, he said that he's observing about 3%, 3% per month profit. So I guess this makes sense, bearing in mind I started in about mid-September, which gives us about, and I made like 14%. October so far, today is on the 26th of October, so we are almost at 20% this October. So based on my leverage, I'd say it kind of makes sense. So I definitely recommend trying this out. I'll be continuing to use this approach, and yeah, I hope you like, share the video, subscribe to the channel, and let's continue experimenting and seeing what the market has for us. Cheers. Hope you have a good one, and I'm wishing you a great and profitable trading week ahead.